I'm going to be kind of talking through this chart I made on TradingView, which is this kind of new platform that I found maybe a couple weeks ago. Um, the reason I found this is because I saw someone post on Twitter a graphic that kind of looked like this, and I just thought this looked too good to be true. I mean, you can see just how it matches up, and I thought I needed to go into this and make it myself. So I went into it. I mean, this is a pretty user friendly platform, um, and I'm just kind of gonna walk through, what I did and what it's showing me and kind of what I'm thinking for the future. So this red line is the Bitcoin price, and the blue line is global M2. So global M2 is the total amount of broad money, which is cash, checking deposits, and easily convertible near money across across the entire world. So you can see when you double click right here on global M2, you can see it's all of like the developed nations, the USA, Eurozone, so that's all of Europe, UK, Japan, Canada, Brazil, Russia, Switzerland, just all of these all meshed together. And the reason it's important for to do that for Bitcoin is that Bitcoin is a global asset. It trades 24/7. If you're in Afghanistan, you can buy $1 million worth of Bitcoin. If you're in America, you can do the exact same thing any hour of any day. And so that's why it's important to compare that, because it's it's not just America that's driving this price up. It's people across the entire world. And these central banks post their data and what they're doing, and it can easily be tracked through this website. And this website's free; anyone can use it. Um, and so the blue line's global M2, and you can put a slide the weeks forward. And the reason I did 11 is because often M2 is what we would call a lagging indicator. And I made a little thing, and the reason it is because when these when money's put into the system, the institutional allocation, it takes a little bit of time for that liquidity to get put into the market. And usually the way these institutions uh, put their money in, they start with bonds and then they move to equities like just Apple stock or whatever, commodities like gold, silver, just, I mean, there's so many different commodities, and then speculative or risk assets, and that is where Bitcoin comes in, and it's last in the pecking order. And that's why my theory is Bitcoin is a signal of abundant global liquidity, and that's why we're seeing this this perfect correlation. I mean, like you can look, like I got it right here. Even the shapes are so similar. Like right here, um, and you can go and look at the time. Like this, I believe this was election day. This is when things kind of started rocketing. Well, it really started here right after Labor Day, but the big jump was when it caught up right here, because Trump was pro Bitcoin. People kind of thought Kamala might win in the days before, and then suddenly Trump came in and won, and it rocketed up all the way to here, and then it started falling a little, and then no coincidence, Inauguration Day, January 20th, it ran up, and that's when it hit its, I think that was its previous all-time high. Now it's at 111,000. And then it dropped, the M2 dropped, um, interestingly, because you look in the stock market, and there's all this tariff stuff going on, and we're like, oh, that's why stocks are dropping. But then M2 was dropping, uh, I guess 11 weeks before this actual drop started to happen. And so I don't know. It kind of makes me think, like, do we just like to put reasons on things that can't actually be explained, or I guess it could be explained by this liquidity. But yeah, like same shapes here, the same shapes on the run up, and as of right now, it's the way this. I mean, you can't make it perfectly fit, but the way this chart is fit, it right now, as of May 22nd, it has it at 180,000 in the late July, early August range, and it has it hitting around like 125 in the first week of June, and then once you're ending off June, hitting July, it goes up 150 and then 180. And I mean, I'm gonna keep watching this chart and just see if it keeps rocketing up. Then I mean, I'll go long on it. But if it starts plummeting like December, it started plummeting down, that would have been a good time to sell. Looking back on it, but I didn't even know this kind of stuff existed a couple months ago. But I think once it starts falling significantly, that will probably be a good sign for you that you're on borrowed time, and it might be time to pull the plug. But I mean, the summer's looking good based on this chart. I mean, I know there's all this stuff with the bond market, and our credit rating just got downgraded by Moody's, but I don't know. Me personally, I have a lot of cash right now, probably 60% cash, and then I'm heavy in iBid options. I was just looking at them. I'm probably gonna pull the trigger on some November hundreds, and then July 85s, and then June. I think it might have been 70s. That might have been what I did. But yeah, and I mean, I did a separate tab just because I didn't really want to mess with this. But I mean, you can go, like, I have MicroStrategy overlaid with it, and you can play around with the kind of the graph. And you can like delete this and then go in, and like I could do Apple. I mean, Apple's a lot less correlated, but you saw what I had MicroStrategy on there before. That was a lot more, but that also because it's a Bitcoin asset. But I mean, generally, the stock market, I mean, is moving in this direction. I mean, Apple's kind of not a good example because it's kind of like if I did the S&P, I'd be curious kind of how it's low. Yeah, I mean, look at that. So, I mean, this is global liquidity. I mean, I guess investors across the world are buying American stocks. But like in the general direction of it, I mean, it looks like it kind of fits. Not as well as this last chart, but I don't know. Something interesting to think about. And if you got any questions, just let me know. I'm happy to talk about it with anyone who wants to learn more. So that's all I got.